Who is manipulating the silver market? And coming in from Bloomberg, JP Morgan's big hitters of gold market face trial over spoofing. 3 face prison if convicted of rigging prices for years. JP Morgan dominates precious metals. US says were manipulated. Were, still are. Now, before we have a look at this article, I just want to cut to 2 short clips with Rick Rule regarding manipulation.
I never asked you this question, but a few experts in our circle, Rick, that we know, have come out saying that the CPI numbers, they don't even believe the CPI numbers were being told. I bring this up because we're talking about the notion of truth here. Do you think that the numbers are being manipulated to prevent a confidence crisis?
Yes. I absolutely believe that the CPI stated rate of inflation understates inflation. Now, again, I'm not an economist, but I can tell you, Daniela, that wherever those people shop is not, in fact, where I shop. And you'll note, too, that when they discuss core inflation, they leave out in food and fuel. That's okay, but as you can tell, I like to eat, and I do drive. And the idea that my cost of living doesn't include food and fuel, if it's inconvenient, is a very odd thing. The oddest thing for me about the CPI number, which is allegedly a cost of living number, is that it doesn't include tax. Government is the largest expense in most earning households in the country. And the idea that you ignore the increasing bite on your wages and salary and savings that's presented by government is an absurdity. I guess if I didn't have to pay the tax, I might complain less about the index, but that's not on offer. So yes, I think using the CPI number to calculate inflation is a mistake. I use the CPI number myself because I'm too lazy to construct a different number. I don't know how to do it. And because if you use the CPI number, particularly relative to interest rates, the CPI number is high enough that if it doesn't evoke terror, it should.
Do you think the price is manipulated?
Oh,
if not, if so, or if
your
not,
readers
why?
your readers are going to hate this.
No, but I think you and I see eye to eye on this. But I'd love
all
to hear.
markets are manipulated.
Yeah. That's
okay. I cut my teeth in the early 70s in the Vancouver Stock Exchange. So I got to see manipulation up close and personal, But if markets as large as the S&P 500 index and LIBOR are manipulated, and they've been proven to be manipulated, clearly in the short term, all markets are manipulated. And gold and more likely silver are fairly easy to manipulate in the short term.
Yeah.
If you look at the fact that the futures market is so large relative to the spot market, it's pretty obvious that an intelligent trading syndicate could, as an example, short the time ladder in silver out 2 years, 2.5 years, utilizing a lot of margin, and then borrow a bunch of physical silver, sell it in the overnight market to depress the physical market, which then has an outsized impact on the futures market. If you were short, $1.5 billion or $2 billion in the futures market, which is no great trick, given the liquidity in those markets, and then you were able to sell 50 or 60 or $70 million in the overnight market, driving down the futures market by 5 or 6%, the amount of money that you had to pay on the borrow to sell into the physical market relative to what you could make being short the futures market is infinitesimal. And it's pretty clear that when you watch the silver price and you watch these large sellers in the overnight market when there's no liquidity, that's precisely what's happening. What I don't believe is happening is that there is any decades-long conspiracy involving big governments the people who lost the war on poverty, lost the war on drugs, lost the war in Vietnam, lost the war in Afghanistan. I mean, the idea that these morons who can't deliver the mail or educate the kids can engineer a 25-year-long precious metals market conspiracy doesn't make sense to me. Similarly, the idea that the largest banks in the world that exist to generate quarterly cash bonuses for their executives, the idea that these banks would engage in a decade-long conspiracy that had a negative interest carry, which is to say where the position cost them margin as opposed to earn them a spread, that isn't the Goldman Sachs that I know.
Right.
The Goldman Sachs that I know exists to generate quarterly cash bonuses for its executives, and you don't deliver quarterly cash bonuses by having a net interest charge. So I don't believe that there is any systemic, decades-long conspiracy to suppress the price of gold and silver, especially over the last 40 years, where declining real interest rates and a strong US dollar was doing the job for them.
Yeah.
Why would you spend billions of dollars depressing something that was going down anyway?
That makes sense. That's kind of what my view was, is short term, yes, long term, most likely not.
So let's get to this original Bloomberg article on Canada Express News. JP Morgan gold desk ripped off market for years, jurors say. JP Morgan Chase & Co.'s precious metals business operated for years as a corrupt group of traders and salesmen who manipulated the gold and silver markets to benefit the bank and of his valued clients, a federal prosecutor told jurors in Chicago. Now, that's the thing, is, you heard Rick Rule. Rick Rule talks about, markets are always manipulated both down and also up. And I've also been told from some heavy hitters and some big institutional investors that when they're going long gold and silver, then JP Morgan and Goldman Sachs, they cease their manipulation on the price going down and allow the price to move up so that they and their clients can benefit. And then when their big clients are out, well, they get back to what they're doing. So that kind of makes sense. This case involves a criminal conspiracy within one of Wall Street's largest banks, said Lucy Jennings, a prosecutor with the Justice Department's fraud section. To make more money for themselves, they decided to cheat. The trial of 3 former JP Morgan employees, including veteran precious metals chief Michael Nowak, is the most ambitious effort to date in a year of US crackdown on market manipulation and impersonation. Unlike previous cases of alleged business fraud, the trio are charged with racketeering conspiracy under the Racketeer Influence and Corrupt Organizations Act 1970, a criminal law more commonly used against the mafia than against global banks. Nowak, gold trader Greg Smith, and Jeffrey Rufo, an executive director specializing in the sale of hedge funds, are charged with racketeering conspiracy as well as conspiracy to commit price manipulation, wire fraud, fraud on raw materials, and an identity theft from 2008 to 2016. Altogether, Nowak and Smith have been charged with more than 24 crimes. All 3 defendants face decades in prison if convicted on all counts. Another trader, Christopher Jordan, who was charged alongside them, is due to stand trial in November. Spoofing, banned by law in 2010, involves huge orders that traders cancel before they can be executed in an effort to push prices in the direction they want to make their genuine trades profitable. While cancelling orders is not illegal, it is illegal as part of a strategy to trick others. When this trick works, there's someone else on the other side of the deal who lost, Jennings told jurors in his opening statement. Someone got scammed, she added. We will prove that the 3 defendants knew from day one that this trade was fake and did it anyway. Lawyers for Nowak and Smith offered jurors a starkly different view, saying prosecutors misrepresented how and why orders are made in the precious metals market and insisted the defendants never intended to deceive anyone. They said the government had hand-picked trading data to create the false impression that traders were spoofing when they were in fact placing real executable and open market orders. The simple government narrative does not tell the whole story, far from it, David Meister, Nowak's attorney said in his opening statement. Now, where do we know David Meister? Who is he? And coming in from Forbes, government prosecutor concerned about defense attorney representation in spoofing case. The defense attorney of JP Morgan's Nowak in the current US federal trial, none other than David Meister, former head of CFTC Enforcement Division from 2011-2013. Same Meister, while at the CFTC found no evidence that JP Morgan rigged the silver market. Jonathan Kogan, Smith's attorney, said gold and other precious metals are traded in a market where computer-generated algorithms can buy and sell commodities in a millionth of a second. To compete with so-called algos, to execute trades on behalf of JP Morgan's clients, Smith regularly had buy and sell orders at the same time, Kogan said. While some orders were only active for a few seconds, that's an eternity in such a fast-moving market, he said. According to Meister, the evidence presented at trial will show that the vast majority of all market orders are cancelled and that the typical lifespan of an order is only a few seconds. Defense teams also said there was no evidence, including in JP Morgan chat logs or recorded phone calls, to show what traders Nowak and Smith were thinking, meaning prosecutors cannot not prove that they intended to cancel the orders before executing them. In order to win this case, the prosecution must prove beyond a reasonable doubt what was going through Mr. Smith's mind all those years ago, Kogan said. Ruffo's attorney, Guy Petrillo, said his client was a JP Morgan salesman who worked directly with clients who wanted to buy or sell precious metals, and his job was to place client orders. Ruffo never placed any of these orders, was not involved in executing the trades, and that his compensation was not tied to the profitability of the bank's trading activities, Petrillo said. Key witnesses. Jennings said electronic communications and other evidence will show how the three worked together to ensure their trading impacted the markets in their favour. She said the government would bring in former traders who worked under Nowak and with the defendants. This includes John Edmonds, a former JP Morgan trader who previously pleaded guilty to price manipulation charges. Another likely government witness is Corey Flaum, who worked with Smith and Rufo at Bear Stearns before it was acquired by JP Morgan during the GFC. Flaum pleaded guilty in 2019 to attempted price manipulation. After opening statements, the Justice Department said its first witness will likely be John Shearer, who will testify about the operations and mechanics of the Chicago Mercantile Exchange futures markets. Prosecutors allege Smith and Rufo brought their illicit business tactics from Bear Stearns to JP Morgan, and their business strategy was quickly adopted by Nowak and others. Bear Stearns traders' tactic was to place multiple orders at different prices, which together was significantly larger than the actual order, a technique the government calls layering. Orders placed in quick succession after the actual order would be cancelled as soon as the order is fulfilled. Thousands of trades. Smith, a chief gold trader, performed some 38,000 lamination sequences over the years, or about 20 a day, prosecutors said in documents. Nowak himself mainly traded options, but he dipped into the futures market to hedge these positions. He tried his hand at layering in September 2009, according to the filings, and went on to use the technique some 3,600 times. While some of the transactions began before lawmakers banned spoofing, the tactic reportedly continued to be prevalent, with JP Morgan traders engaging in spoofing more than 50,000 times in nearly a decade, prosecutors said. Rufo, meanwhile, allegedly told Smith where he needed the market to fill orders involving at least two of his hedge fund clients, More Capital Management and Tudor Investment Corp., according to court documents. Lawyers for Rufo and the others said they may call traders from those hedge funds as well as one from Soros Fund Management to testify about the transactions. Their witness list also includes 6 current and former JP Morgan sales employees on the precious metals desk, 2 of whom supervised Rufo.
When it comes to buying large quantities of gold and silver, traders speak a language very few would recognize. Contracts, contangos, and coiling. Algorithms and spoofs. Just a few words to describe actions that can produce staggering profits. The bank is doing the robbing. It's no ordinary bank. It's a bullion bank, an international bank licensed to deal in gold and silver.
we're showing this in silver because it's easier to see. But in gold, gold is the largest commodity market on the planet Earth. And yet we've got the same thing going on in the virtual world of gold.
Here's how it worked. Traders waited for most of the major markets from Shanghai to London to be closed. In New York, a gold and silver market called the COMEX was open, and this is where they concentrated their dealing.
This is a virtual world. This is not real physical. There's no numbered bars necessarily behind this. Essentially, you've created electronic gold and electronic silver.
Trading anonymously, the players use what are called algorithmic trading systems to move in and out of futures contracts in the blink of an eye, 400 contracts a second. Each contract represents 5,000 ounces of silver.
Suddenly, someone gets the idea to sell nearly 45,000 contracts.
Such a massive wave of selling immediately drives the price of silver down. Investors big and small try to cut their losses and sell as the price drops. Anyone not in the game gets clobbered. Then, without warning, the mysterious seller reverses course and starts buying the electronic silver back. Once again, by massive buying on the electronic exchange, the trader dictates the price, making it go up and profits massively from the rise. The profit on each contract reaches $80,000. That's $80,000 times 45,000 contracts. $3,600 million.
It is illegal. It's absolutely illegal. Under commodity law, you're not allowed to be dictating the price on the futures market.
And from one of the WikiLeaks dumps, we got this 1974 US Treasury cable from London, which says, to the dealer's expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by US citizens. Now, I've shared this little clip before from Creflo Silver, so check it out. So due to a copyright issue, I can't share with you Creflo Silver's little video. However, if you go to this video, and I'll put a link in the description below, and at the end of this video, Silver Squeeze round 2, break the COMEX, and go to the 35-second mark, so 35 seconds into the video, where you'll see that 2-minute clip from Creflo Silver, where he explains the silver manipulation, why they're doing it, why they don't want you owning silver or gold. And this chart really says it all. So we've got the Lbma overnight gold fix index, which is created by taking the percentage change between the Lbma PM fix and the Lbma AM fix and adding it to the prior day's reading. And then you've got the Lbma intraday gold fix as well. So the blue line shows a theoretical price for gold if you bought on the Lbma PM fix and held overnight and sold on the Lbma AM fix. And the black line shows a theoretical price for gold if you bought on the Lbma AM fix and held over the day and sold on the Lbma PM fix. Shared charts about this before. Pretty clear. So who is manipulating the silver market? Well, check out this chart from the Office of the Comptroller of the Currency, where this report shows that JP Morgan Chase and Citibank hold 90% of all gold and other precious metals derivatives held by all US banks. There you go. So here's a chart from the Bank of England showing vaulted gold. And as you can see, there's been 258 tons of vaulted gold that have left the vaults. And the question is, are Western central banks selling physical onto the market to put downward pressure on the price, or are non-Western central banks simply accumulating gold? Now, this isn't the end of the story. Is the manipulation in the silver market about to come to an end? Are we about to see the true free market value of silver be revealed? And what is the true free market value? To find out, Join me on the next video where we hear from a former executive in the bullion broker market who was actually doing the manipulation. Guys, if you like this video, please hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.